Hello, in this video we're going to do a little labor economics by talking about income maintenance programs, in particular the implicit tax associated with income maintenance programs and this concept of break-even income. Income maintenance programs are programs such as welfare and public assistance that provide income benefits based on a household's level of earned income. Let's define a few things. We'll let B represent the income benefit received from an income maintenance program. Little t here will be the reduction in income benefits from a dollar increase in earned income. So this is an implicit tax. Many income maintenance programs reduce the size of the benefit as a household's earned income rises, acting as an implicit tax on earned market income. For example, if t equals 0.4, a person who earns an additional dollar of income will lose 40 cents of income benefits. We'll let y equal earned income, and s here will represent the actual income benefit or government subsidy received by the household. Let's put all those terms together. S equals B minus T times Y. S is the actual subsidy. B is the income benefit received from the government. And little t is the tax, the implicit tax, and Y is earned income. So example 1, let's let earned income equal 0. So here's a household that is not earning any income in the marketplace. Let's allow t to equal 0.4. And let's say this household qualifies for $10,000 of income maintenance benefits. So plugging everything into our formula here, the actual subsidy here is $10,000. Since this family is not earning any income, none of these benefits are peeled back or rolled away. So the household receives a $10,000 income benefit from the government, assuming they're earning 0 earned income in the marketplace. Example 2, this household is earning $12,000 of earned income in the marketplace. Same tax, same income benefit. Let's now calculate the actual income subsidy here, income benefit. So 10,000 minus 0.4 times the earned income means that this household will receive $5,200 of welfare or public assistance benefits from the government. So the household receives, once again, $5,200 income benefit from the government. Now let's talk about this break-even income concept, the amount of household earned income, Y, that causes the actual income benefit to equal 0, drop to 0. So after a certain level of earned income, the household will no longer be eligible for welfare public assistance. We want to find that level of income, or the so-called break-even level of income. So here's our formula we've been working with, setting the left-hand side of the equation equal to 0. And now solving for y, moving some things around and dividing through by the tax, we have our break-even level of income. So just rewriting that formula and just using our earlier example, if the benefit is $10,000 and the tax here is 0.4, what's the break-even level of income earned? 10,000 divided by 0.4 is $25,000. So if this household earns $25,000, this household will no longer be eligible to receive any income benefits from the government. Okay, that's it.